Hi, everyone, and welcome to Trades of the Week with myself and Keith Sullivan. And today we have an amazing episode in front of us, and you can see the carnage in the market currently, I suppose, where we're seeing cryptos falling, Bitcoin as low as 20,000 or just above 21,000, and the NASDAQ and stocks are falling a lot as well. So today we're going to dive into why and what's happening, and also, of course, our game plan. But before we head into today's session, partly excuse my voice, but we are here, of course, with the updates, even though my voice is giving up on me, that it's going to come back for next week, I'm sure. But before we get started, for all of you that want to know and learn how to maneuver this market, which is very difficult, of course, it does require that you learn how the market works. And the best way to do that is to get started with our I Am Insider. So I Am Insider is something we've created. You probably heard of it before if you haven't. It is our completely free, exclusive content membership in a way. So what you need to do is to just sign up and you'll get your access straight away. And you get exclusive content in there, everything from startup courses to books and other exclusive material that you need to really start your trading and investing journey in the best way. So please press the link somewhere around here and join I Am Insider today. So that being said, let's jump into it. So looking at our buffaloes this week, and we will go through the buffaloes, then the VCAs. We're going to end with the very exciting topic of cryptos today. So make sure you do stay until the end. So looking at BRY, that's the Berry Corporation. We had a 1% profit on that. So the results here are actually not as bad as it may seem when the markets are falling, because we're always hedged. So we go long, but also go short. So that's a 1% profit. That's worth a boo key. No, not a boo, a moo, I'm sure. Here we go. Moo. I'm not sure if my voice is better with mooing or not now, but let's look at THG as well. We got stopped out at break even. We kept our stop loss a little bit higher, and then it came breaking down. So we got stopped out at break even, neither profit nor a loss. On DOC has really been coming down, a perfect buffalo opportunity. We're looking in 1.5%, currently up roughly 2.27 there, which is awesome. So we're looking in 1.5% on that. Same with IBKR. We are putting a stop loss at 0.5% profit. We're up roughly 1% just to lock that in as well. And then on CI, we had a 1% loss, just took us in, and then boom, took us out. So there we had a 1% loss. So that's a boo. Not great. Good boo, Keith. Well done. So now, before we jump into the two last ones, the two new ones for this week, what is happening, Keith? Why do we see the markets crushing down?
Thank you there, Dennis. So in regards to the economy and the markets, as we are all aware, we are seeing very bearish movements in the market. We're seeing the stock market crashing. We're seeing commodities having a fall. We're seeing cryptos having a fall. And we just got to look at the reasons why. Now, economists are basically saying we have our perfect storm on the hands. Okay, what does that mean? Anything that can go wrong is going wrong at this point in time. So the reason that we've seen a bit of a negative reaction in the market over the last couple of days is all down to the inflation once again. So remember a couple of weeks ago, we said that analysts believe that inflation topped out, okay? And I believe it was around 8.5. Now, from last month's inflation report from CPI, it's showing that inflation has actually increased to 8.6%, which is the highest it's been since 1981. So we are seeing still slightly increase in inflation. Now, some people are going to say, but Keith, inflation's increasing, but people are still spending money. Yes, the consumers are still spending money. Okay, they're still putting money into the economy, but we need to look at where that money is coming from. So if you look at in regards to the credit scores, people are taking more debt out to be able to pay for standard goods like energy, like food, like oil, for example, petrol. They are taking debt out to be able to pay for that. And that is negative for the economy because it can't be sustainable. You can't keep paying debt off to be able to buy stuff in the economy. So that figure just does not show the true effect of the market. So that's the first thing. So we're seeing an increase in cost of living, food, energy being the two highest ones. We're seeing an increase in cost of capital, where it's your rent and the properties. And we're also seeing that there has been an increase in regards to unemployment, okay? So unemployment has slightly begun to increase, and companies are freezing employment right now because their margins are just too small. So they're freezing employment, that's step one. If it doesn't improve, they will start getting rid of contractors. And if that doesn't improve the margins, then they'll start sacking their actual staff. And it was, I believe, so we've got NVIDIA, we've got Tesla, I believe Microsoft is another one, Salesforce is another one. These companies are freezing employments and they're not employing anyone new. And that is not great for the economy, because we can start seeing non-farm payrolls we spoke about last week begin to decrease because job opportunities just ain't going to be there. So that's the other thing. And if we have a look at Tesla, we said it last week, they're looking to probably cut 10% of their staffing costs. So that's 10,000 staff that could be made redundant. And the last thing that we're looking at is we've got increase in cost of capital, increase in regards to cost of living, but we're not increasing the employer's pay as quick enough, okay, to beat or combat inflation. So everything is going up in value, but wages are not increasing as much as possible, okay? And that is showing us that people are going to begin to struggle, and we could potentially be seeing a recession coming into the US. Now, obviously, we have to wait for that second quarter of GDP to show it's negative, so a decrease in the economy size, and then we've got that indication of we are now in a recession. But we could see more volatility occurring over the next few days. Why? The Federal Reserve are having their two-day meeting where they are probably going to be discussing an increase in rate hikes. So they were planning a 0.50, so 50 basis points, so 0.5% increase. That now could look at a 75 to 100 point base hike, which is 0.75% to 1% increase this month, which also could have a real negative effect on the overall market. So that is basically, in a nutshell, you're seeing everything increasing in value. You're seeing people take out more debt, which they're going to have to pay more back on because of the interest rates. And you're seeing that they're not being paid enough to combat the increase of living costs. So that altogether creates that perfect storm, and we could potentially be seeing a bearish move in the market over the next few weeks. Now, what's that mean for us? It just means we need to follow the strategies. We need to make sure we follow FCA, getting into the fundamentally strong companies. But we also need to be hedged in the stock market. And as Dennis showed you the results there, even though our long positions may have taken us out in a loss, for example, CI here, we are also making profit on our shorting positions. And this is the importance of being hedged, because when you're seeing a shift in the market where something goes from being bullish to extremely bearish, as long as we are hedged, we might lose 1-2%, but we can make 3-4-5% on the other shorting opportunities as we are right now. So Dennis, anything else to add on that?
No, that's a great summary, Keith. And like you're saying, so many companies are now letting off staff, and not only the companies that we know, Tesla, and a lot of the bigger ones, but also in the crypto space, which we'll get to a little bit later. The market is very fearful at the moment, and with trading, it does not matter. This is what's so important here, because when we do the Buffalo, it doesn't matter that the markets are falling or going up, because we always want to be hedged. Therefore, we have two Buffaloes that we have added. Number one is PRVA. We got into that yesterday, actually right where the price is at the moment. So that's a good opportunity to have a look at, do your research. We got into this yesterday. And then we have the other one, ODP as well. This is the ODP Corporation as a long opportunity. So we have a good level of support just to make sure we're hedged. And the only time this is dangerous, and you might even feel that you're panicking a bit because the markets are falling. We don't know where the bottom is. No one knows. And looking at the stock market, it does look quite bad in that sense, since it's just falling, right? And a lot of companies and Square, PayPal, a lot of these tech companies are down 70-80%, which you might have in your portfolio. But just know that after rain, sunshine comes, right? That's always the case. But also, you do need to have a strategy. If you don't have a strategy, make sure you get one right now. I Am Insider is a great place to start. So comment below, how are you feeling in this market? How can we support you? We've been through this before, and there will always be a bear market or a big correction. And then after that, we do see phases of both accumulation, but then also that the market does go back up, right? That's just how it works. And so be patient, never invest more than you can afford to lose. And also do know when you're investing, don't use leverage. And there's so many people losing all their money because they're using leverage, which really is that you are taking a loan to trade and invest. And if you are trading with leverage or not, always use a stop loss. Super duper important. So those are my 2 cents to add. So yeah, the overall market, like he said most of it. We are expecting it to maybe go down to 10,900 now, and then maybe as a last resort, it might go down to the high of 2020 before the COVID crash. Now, that being said, we are no gurus. Keith has still not got his crystal ball, and we're just giving you qualified guesses based on the economy and what's happening. But we know we will come winning and swinging out of this market. Like you see, we're still up this month when most people are down. Me and Keith discussed this earlier. We're up 6% and 7% on our portfolios with our trading, not with our investing. We're obviously down, but with our trading. So just the importance of having different strategies to always be hedged. So you can make we have this title in the video, but millionaires are being made in a bear market. Because if you can buy something cheap, then of course when it goes back up, it needs to be into quality companies, then you're going to make money out of it. So with that being said, let's jump over to the VCA then. So speaking about these companies, they're down the drain. So looking at PayPal, which actually is a good company, is down 76%. My next entry is at minus 80%, or our next entry. And then with Zoom, they actually had some good news last week. ARK Investment actually came out and said that they got a big stake. It's one of their biggest holdings now. It's Katie Wood's fund. And she bought a lot of Zoom shares. And Zoom, as we know, is from the highest point, is down 83%, but from the recent high, down roughly 74 or so percent. So there's another one to just keep your eye out for. But look over your positions, make sure you're hedged. And there are some other ones. I think we got out of the silver companies before, but do have a look at this. We got out of a 20% profit on Pan American Silver Corp. It might be worth revisiting this. We are not getting into this week, but keep it in your radar to be invested a bit in silver as well. It's down 30% at the moment, which is quite a lot. And the one we're adding this week is American Express Company. It is a great company, and it fell down quite a lot now the last 3 days. And it's very rare that it does fall down. Let's see here, that it does fall. We got in at minus 20%, but it's minus 24 at the moment. So you can actually get in at a better point. But you can see here, even during Corona, it fell down, well, 50%. So, but not that much compared to many other companies. So I think this could be a good investment moving forward, but do make sure you are patient. We do need to invest at the minus 30, 40, 50, 60, 70 as well. So all the way down. But great company, good earnings. They have low debt. They're great return on asset, return on investment, and return on equity, which is usually a really good sign. So do make sure you comment below. Are you getting into these companies as well? And what is your result? Obviously, we're probably down a little bit on our VCA investments at the moment. And but when it turns, we're gonna be off for the better. And we usually propose, we want to give you some new opportunities each week. But we are generally speaking, we are in roughly a 5 to 10 VCA opportunities at every single time or at any given time. So that's that with the VCAs. And if we head over, and actually one thing to consider, if there's now a shortage and people are lending for food and even for gas, electricity, maybe those are some of the companies that we should be looking at as well. So how can we find opportunities in this? That's one thing to consider. But looking at cryptos then, and looking at cryptos, we definitely broke down, and we had a fake breakout here, but then we broke down instead. On the back of several pieces of news. We know about the Luna crash. We discussed that. But also, Celsius is one of the biggest lending networks in the world, or when it comes to cryptos. And they're not only cutting staff, they have frozen all withdrawals and all swaps and trading within their platform. And the reason they're doing that, no one really knows, but they're speculating and saying that it might be a bank run if they don't. Everyone will withdraw their money, and Celsius has gone down a lot as a result. It's $20 billion they have in there. And that could get bad. And people are also speaking about the Tether USDT. And in terms of Celsius, if you can, right? And then don't deposit more money in there, of course. Try to withdraw them. And if you have a loan with them, I wouldn't repay it just yet. Because if they do go belly up and can't deliver, then I don't think you need to pay back the loan either. So there is one thing to consider potentially. And the last thing I want to mention here is USDT. So some people are saying that USDT is a bit risky. That's Tether, the biggest stable coin, and that might be that they will lose its peg. So it might be safer to keep your money in USDC rather than USDT as an example. And the third thing is, we're not sure how bad this is going to get, of course, but we always say this is just a reminder, but keep the majority of your coins, 70%, on a hardware wallet like Ledger, so you don't have it on your exchange, right? In case they do like Celsius, they close it down. So make sure you have the most of it on a Ledger, Atomic wallet, even MetaMask, so any kind of ledger that they don't really can close down. So I actually listened to something yesterday that I think was really cool, and that is this. And if we have a look at the weekly chart now, every candle is 1 week. A lot of people bought at these levels here when Bitcoin was at all-time high. Currently being down roughly 70%. Can it go down lower? Absolutely. It can go down a lot lower. Absolutely. But now is a time to start accumulating. Up here is not the time to start accumulating. If you believe in Bitcoin long term, now is the time to start accumulating if you haven't. We're obviously been accumulating for quite some time, and we're going to keep accumulating all the way down. Because what always happens is, and this has happened every single time, we get the bear market move down, then we get a phase of accumulation, which you could argue is this phase here. But then after that comes another bull market, and that's where we might make a lot of money. And that's, of course, our intention. So no one knows how long and when and how long it will last, but we do know there will be a halving in a few years. So in 2 years, I think there'll be the next halving, which then maybe we get something similar. Maybe we get something similar then. So we'll see. But some really good quality projects that we're in. One of them is Solana, and you can see that Solana has fallen all the way down to almost where it started at $20-$30, and I mean, did go up to almost 300. So some of these has fallen so much. Look over your positions. And the one we added last week was Link at minus 79%, and there is also a giant fall down. And I mean, yeah, I can't believe the market has fallen as much as it has, and I think no one of us can. But if you believe in crypto long term, I wouldn't buy, the smallest one, but these ones that are the biggest ones, the safest ones. Yeah, I would absolutely look at buying those. Filecoin is one we're looking at the moment. So this is one crypto that we are looking at to getting into, and we have because we think that the more the crypto space, the technology space grows, the more data storage will be needed. Filecoin is the biggest player in that case. So therefore, we wanted to mention that as well. So minus 86%, I think is a great one to be looking at as well. So with that, excuse my voice. With that being said, Keith, is there anything you would like to add?
So in regards to crypto, there's one quote, and I love this quote, is when the tide goes out, we see who has been swimming naked. Okay. Now, it's so true for not just investors who invest at the high and then all of a sudden it hits the fan. I'm not going to swear. And then they sell out at the loss. But it's also the same for companies. The companies which have really improved since we've seen that bull run, that were massively overvalued, and same with cryptos, we're going to see the ones that are truly going to survive now. Okay. And this is a great thing, because when there is these type of bear markets or recessions, it shakes out the beep. Okay. The companies which don't deserve to be there. These are zombie companies. It shows cryptos who do not deserve to be there, who have no utility, which really does help the market in its longer term future. So it's all about accumulation right now. And I know your mindset's really going to play a part of going, oh my God, I'm losing my money, I'm going to have to sell. Do not sell. This is exactly the same with what people did in 2018, and they're kicking themselves now because they didn't buy as the market drops and then all of a sudden makes an all-time high. Accumulate. And then when we see the next bull cycle come in, you're then really going to reap the rewards. Okay, so that's really what I've got to say there. Do I believe crypto is a long-term future? 100%, 1,000,000% yes. Okay, and there are some coins which I believe are going to outperform others when the next bull market comes. But it's all about just finding them strong projects which give utility, which solves problems. Okay, so if you see a coin that you want to invest into and it doesn't solve a problem, chances are you ain't going to make a good profit on that. Okay. Other than that, I think we've seen some good news come out about crypto as well. Yes, there's negative sides around, but a nice little bit of news that came out actually at the end of last week was Chainlink are now looking at staking rewards. And staking is a great revenue builder right now, especially when the market is being bearish and the coins that you're holding, you might as well stake some of them coins to get some sort of passive income. So that when the market does recover, you've got a bigger holding without actually having to spend any more money. So yeah, Dennis, that's my 2 cents around crypto. It's just be patient, accumulate, stake, and then when the market recovers, we're all going to be on yachts together, drinking margaritas.
Yeah, sounds like a plan. I'm going to drink tea for my throat. And there's another quote that is good, and that is that when I don't actually know the quote, to be honest, but even shit floats, right? And that means that when everything goes up, even the bad projects go up as well. So do make sure you focus on the big quality projects, which you can find at very low prices at the moment as well. So with that being said, everyone, we will always be here. We will always be here no matter what happens in the market. And the last thing I want to share is, of course, the results. We had one loss and one profit on Buffalo, so that's 0. But then BCA, we didn't have any profits there either. We have closed 1,025% on the money invested, but we are down on the positions we're in now. With the CCA, we are up 1,310%. And after speaking to Marcus and looking at the Luna chart, we thought that we needed to take a bit more off because we had 3 entries. Instead of taking 100% off that we did, we're now taking another 200% to 300% in total of the profits, which we thought was more fair. So that's what we did. And then with the small cap, 4,320% on the money invested. So even though, right, this is important, even though we're down in so many of them at the moment, we're still in profit overall because we've taken so much profits. So with that being said, everyone, I really hope you enjoyed the trades of the week this week. And please, if you enjoy what you're seeing, press that like button, but also subscribe and press that alarm bell. And also throw a comment below. What would you like to see and how can we support you in the best way? So next week, we will be back as usual to give you the latest updates, share what we're doing, what cryptos we're buying, what stocks we're buying, and our results, not the least. So from myself, Keith, and the whole team, have an amazing week, and we cannot wait to see you on the next trades of the week.